Second, third, fourth. What does it say for Salesforce, ServiceNow, Palantir, Microsoft, Oracle, hyperscalers? It's $1 trillion of CapEx. It's a fourth industrial revolution. You come off that call, I think it's more of a, you get the popcorn ready, and now it's waiting for the second, third, fourth derivatives.
Yeah, I'll double down on that. I mean, I've talked about network effects. I've said, we've seen net zeros, net one. So all the designers, chip manufacturers, everybody involved in this, in the semiconductor supply chain should be doing well. The ones that are going to do well are doing well. And then you got kind of this flow out. The OEMs, we've seen some boom bust. They've got to figure out how to add more value, make more money, but they're getting the opportunity by being attached. The Dells and HPs, it's up to them to figure out how to attach the services.
This video focuses on the impressive earnings of leading tech companies and the broader implications for the semiconductor and AI-driven industries. Analysts discuss strong quarterly performances, driven by high demand for advanced chips and cloud services, which they see as fueling the ongoing fourth industrial revolution. Despite minor setbacks, such as delays in Nvidia's Blackwell chip, the panelists remain optimistic about the industry's upward momentum and potential for continued growth in the coming month. They highlight that the revenue from AI is influencing a vast range of companies, including Salesforce, Microsoft, Oracle, and various cloud providers, estimating a $1 trillion opportunity for the industry. The discussion emphasizes the network effects across the semiconductor and cloud computing sectors. Companies like Nvidia are seeing not only chip demand but also growing interest in integrated hardware solutions and software, with strong growth expected in both hyperscaler data centers and enterprise-level implementations. Panelists address the need for companies to balance capital expenditures with strategic investments in AI, suggesting that the industry is experiencing a phase of digestion, where early-stage investments are yet to fully reflect in operational gains. They also expect Nvidia's stock and overall market growth to benefit from sustained investment interest and global expansion.
Dan Ives, let's start off with you. Talk to me about earnings. What are your thoughts?
I mean, I get in terms of like people think about whisper numbers for the October quarter, and to me, it's a masterpiece. I mean, in other words, like, there's no way that you could deny this revolution's happening. And I think it's not just about the numbers that they put up in terms of 30 billion, 32 and a half, that's probably gonna be closer to 34 billion. Blackwell delays, all the sort of noise, put that to rest. All right, stock takes a little breather, it gets hit a bit. I think it goes higher. I think it's it goes into all-time highs, and this thing gains steam because the most important thing, and I think you guys have talked about it, it's derivative.
Hey Dan, just as you run off, two things. One is I'll be running to Berlin for I'll be at IFA checking out what they're doing on these devices. But Pat, I think we need to give Pat a shout. I need to commend this nerd. We were Gen AIing what sort of differentiates each of us as analysts. We're having a little fun, and Pat is the deep technical guy. Did you see this guy call out the mask change on Fort? He called out the mask change in real time.
I appreciate that.
But look, Patrick's like, here, hold my rosé. Let me deal with this.
Well, what's kind of funny now, I felt a little bad because I literally brought this out live on CNBC. Nobody was talking about it. Stock dips. And I'm reading from CFO, and it's like, what's a mask set? And it was funny. I was like, I've never really had to explain a mask set. I tripped a little bit, and then about a minute later,
deep diver.
No, I really do try to simplify it, man.
You said Bloomberg's headline said that they had a mass change. They didn't
mass.
Jensen said, I know, but the headline was mass change, MASS change.
No, I appreciate. By the way, Bloomberg deleted that tweet.
Did they? Yeah.
And also, the last thing that they could ever do is come out with something too early, bugs or whatever it may be. Yeah. They got to make sure that this thing is golden. And that's why, because all the infrastructure is built on it. And then the fact that they actually are going to see some in the October quarter, that put that to rest.
Yeah.
And look, I just think we sit here over the coming weeks, over the coming months, and the stock's all-time highs, because it's like, I think as more start to do their checks, they realize like, whoa, demand's not just Mag 7, it's actually other enterprises and sovereign. And remember, you haven't even tapped into Europe globally. We're really talking essentially right now, it's much more of a US-centric story with some China outside the sanction.
I want to ask you about the financials. They announced a new $50 billion buyback on top of a pre-existing authorized $7.5 billion buyback. I would ask you, would it make sense for them to actually act on this authorization, or just keep it in their back pocket in case there's some sort of like market-wide sell-off or something? And then the second part of that question is, are these true buybacks, or like to shrink the float, or are they just being used to sterilize stock-based compensation and new share issuance?
Well, look, I mean, I don't think they're press release buybacks, like in terms of just like, sending a signal type thing.
Right.
I do think that they've recognized some of the volatility that they could see. I think that, the Black Monday, Tokyo scare, a little sort of, clearly got in front of their radar, in my opinion. So it's a true buyback, but the reality is that when you look at AI engineers in the world, the best right now, it's really Nvidia, OpenAI, Microsoft. So as much as people could fret about like options or whatever it may be,
like new stock issuance as compensation,
they have to keep the AI engineers, because that's ultimately key to their success. But it's actually an incremental buyback. I think they're going to go right off the page of Cook and Apple. They're going to actually implement it, and then eventually, in a year or two, we're not talking about $50 billion. We'll be talking about $7,500 billion type buyback.
There's just too much cash flow. They have to do something with it. You can't just plug it all back into CapEx.
Exactly.
The layering of the cake with the devices we just talked about, with the applications talked about, ServiceNow, Raptor, the Now platform, Salesforce, Benioff came out this week, really ambitious. But look, the other thing, and this will be I know we only have a few minutes. I want to make sure, Pat, you get to talk before Dan has to leave, but I really get frustrated with this whole, kind of people looking at a digestion. This is not the internet cycle. We're not going to see this thing implode the way the internet imploded. It's a different cycle. There is a digestion period. When you spend 100 to 200 billion in CapEx, you cannot stand that up, offer services, instantaneously show revenue. And Satya, Zuck, Sundar, they're all basically sitting there. They're saying, we will not let this cause our demise by not investing enough. They all understand it. And so when all the bears are like, oh, there's no one using it. First of all, Pat, you gave a bunch of great instances where they are, and that's just BS. They are using it, but we do need to understand there is digestion between the CapEx in and the OpEx out.
No, this is good stuff. And listen, I net it out like this. There's nothing stopping this train for 12 to 18 months. Downstream does not matter for 12 to 18 months. You've got hyperscaler FOMO, right? Nobody, whether it's Meta, Microsoft, Google, Amazon, it's pedal to the metal on CapEx. And until we see their investors demanding reduced CapEx, the beat really goes on. And I want to hit the growth areas really quickly that I don't think people are fully comprehending. The first one is, the first build out was with the hyperscalers. The next build out is in tier 2 CSPs, and we heard Dell talk about this last night. And let's put Supermicro aside for a second, but Supermicro and Dell are the tier 2 CSP drivers. The third element is the enterprise, and we saw a little bit of that outlined. And right now, as Dell's Jeff Clark said, the enterprise is really in phase 0, moving into phase 1 POCs. Third growth area is content, right? They're not just selling GPU chips. They're selling racks. They're selling trays. They're selling GPU chips. They're selling multiple networking chips. And oh, by the way, they're selling cables. And let's not forget software. Every new generation, including Blackwell, we have seen NVIDIA sell more software. And that software started off, 15 years ago as low-level drivers. And here we are with Blackwell generation called NIMs. And these are actually microservices applications. And you're seeing them be spit out or cranked out by multiple ISVs. And this is essentially the easy button for driving this forward. Yes, there's competition, but it's not going to matter because the market is growing so heavily. Biggest competitor are hyperscaler, their own custom ASICs. AMD is the closest direct competitor, and they will likely end the year, I believe, at 10% market share, not for the whole year, but ending their calendar year. We will see Intel likely making an impact in 25 and 26. They're making a small impact with current Gaudi today, but it's only at $500 million. And compare that to AMD, who's at $4.5 billion forecast. All right, guys. Dan, we got to get you out here to go on more TV shows, talk to all.
I'm going to Asia. I'm going to Asia again this week. So again, it comes down to that's what, like I always say, you can find AI revolutions in the 10th floor of your office building of Metro North or Jersey Transit. And that's why I think many of the bears, they continue to focus on their spreadsheets and try to find AI in their spreadsheets.
In conclusion, the video highlights the strong earnings and future potential of the semiconductor and AI-driven industries, driven largely by growing demand in data centers and cloud infrastructure. Analysts emphasize that this momentum is not just a passing trend but part of a significant shift in the tech landscape, suggesting a sustained impact from AI investments across companies like Nvidia, Salesforce, and Microsoft. Despite some challenges, such as production delays, the consensus remains optimistic about industry growth as companies continue expanding their AI and cloud offerings. Looking ahead, the video suggests that the focus will shift to how well companies can sustain this growth and balance capital expenditures with strategic advancements in AI technologies. As the market evolves, the value of investments in next-gen chips and software, particularly in cloud and enterprise solutions, will likely shape the direction of these companies and the broader tech industry. Do you think the AI-driven tech expansion will sustain long-term growth, or is there potential for a market adjustment? How impactful do you believe investments in AI are for the growth of companies like Nvidia and Microsoft?